Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Shrishti Sharma as well. Shrishti, very good afternoon to you.
Good afternoon.
Markets really does not want to follow and, twin with you today, clearly.
I could sense that once you checked that.
I was like, okay, it's surely not near that green mark. Look at the Nifty 50, right? Below the 22,100 levels, down almost 1%, and especially from the day's highest point. Clearly, we're seeing a very, very sharp fall coming in for the Nifty 50. Nifty Bank too has seen a sharp fall for the day, and look at the Nifty Bank also. Nothing exciting that is happening on that front. We have all the banking names that are clearly seeing a sharper fall today. So let's pull out some of the banking names that are seeing some bit of a pressure in trade today. And when you look at the big banks, ICICI Bank, what is that doing? HDFC Bank, that's also down almost 1% as well. Clearly pressure that we're seeing. And broader markets today, Shrishti, is something that is not participating. While yesterday we saw some bit of a participation positive side from broader markets, today that's not the case happening, and the Nifty mid and small cap too are down and out. Auto was managing to hold on to some bit of a gain because of some of the earnings that came out, but other than that, not exciting, at least on the D Street so far.
Well, yes, absolutely, Winnie. We are down and out, and no significant recovery from the day's lowest point. So let's wait and watch, because today is the options expiry of Nifty 50 as well. So let's wait out for how the data pans out. But with this, let's move on in this edition of Market Fatafat, viewers. We're going to be highlighting all the buzzing counters, and for this we have been joined by our team of researchers as well as our technical expert for the day. On the technical side, Foram M.Chheda is joining us, as well as on the research side, Ashesha as well as Ansh are here with us today. So let's get started, viewers. And the first stock that we're going to be highlighting is TVS Motors. Indeed, the auto pack is definitely in the fast lane today, and TVS Motors is one such stock. After a good set of numbers, the numbers were in line to the street estimates. The stock is up around 5 to 6% at one point in time, now holding on to the gains of 4%, and the reason is the strong commentary despite inline set of numbers. What the management is saying, that FY25 they expect a positive growth not just in their domestic market as well as in their overseas market as well. Going ahead, it's going to be a power pack year in terms of the new launches by the company, because in the ICE variant they are planning to launch a new scooter, and in the EVs they will launch new two-wheeler models in subsequent quarters. They have also started exporting their flagship iQubes e-scooters to some of the Asian countries, and going ahead, e-three-wheeler launch is also likely in FY25. So all in all, good set of commentary and no disappointment as such in the earnings is something that has definitely cheered TVS Motors, and even brokerages are positive on this particular counter.
Absolutely, a thumbs up coming in for TVS Motors. But let's move on to the next stock. And Forum, very good afternoon. The first stock that you picked out for us is Oriental Hotels. I've not seen you pick this out in the past, so this is something exciting because it's already seen a run up of almost 40-50% in the last 6 months. What's your thought on Oriental's hotel, and where do you see it in terms of a target now?
Well, hi, good afternoon, and thank you for having me on the show. With this stock, if you look at it, it has been comparatively outperforming the benchmark also. Now, technically speaking, the stock price did give a good breakout from an inverted head and shoulder. The neckline was closer to around 138 levels. That was this at the beginning of this month. And this breakout was backed by an exceptional increase in volume, which was supporting the overall bullishness. And after that breakout also, we've seen the stock price rally nearly 8 to 9%. After that, there has been a bit of a retracement, I would say more of a consolidated move. Even today, the stock price is marginally down by around 1.5%, when we've seen a lot of mid caps actually down by more than 3% on an average. So in spite of that, the stock has been comparatively outperforming. Thus, if one is holding on to this particular stock and continue to hold on, just maintain a very strict stop loss at around 139 levels from a cautious approach, and look for a higher target of closer to around 160 to around 162 levels.
Okay, surely keeping an eye out on that. But Shrishti, Voltas is a stock that we're going to talk about. Yesterday also it was in focus after its earnings, but there was a con call that happened, and the key highlights, brokerage notes came in this morning. So yes, what we're talking in terms of the brokerage notes, they said that Citi is maintaining a buy rating, hike the target price to 1,628 rupees from 1,428 rupees. They're saying that they believe that Voltas will manage to continue in terms of market leadership in AC. Provisions are now over related to the project business. There was a bit of a subduedness that came in for the project business, and that is why it was a miss, the EMP segment of the company, and that is why we saw a miss coming for the overall results of the company in terms of the EMP's business side. Now, Voltas Beko also, they said that they've been gaining market share over there, kitchen appliances and the smaller appliance side, that has started being doing well. Other than that, in terms of Concall highlights also, they said that the shipping rates is something that was higher mainly due to the Red Sea issue. Premium products, that demand continued to be much higher. So yes, we're keeping an eye out on that, and the company is expecting the Voltas Beko market share to reach around 10%, and domestic international business margins, they expect it to be at around 4 to 5%. These are some of the key highlights overall that are coming from Voltas. Keeping an eye out on that today. Also under pressure, down 2% in trade.
Alright, that's about Voltas, but moving on, let's shift focus to the gold NBFCs counters and Ashesha. This pack is clearly under pressure today. Tell us more on the news flow and the stock reactions.
Yes, in fact, Muthoot Finance has recovered significantly from the lowest point of the day, but Manappuram Finance is sitting with a cut of nearly 6.5% today. Now, we got to know from our sources that RBI has issued guidelines to gold NBFCs. They've said that no NBFC should disburse loan amount in excess of 20,000 in cash. So this is the guideline which came in yesterday evening, because of which both of these counters were under severe pressure today. We spoke to the management of Muthoot Finance earlier in the day, and they said that all NBFCs already followed this process and the impact of this could be minimal. As far as impact on profitability is concerned, is expected to be extremely minimal, and that they are 100% sure that RBI's norms will not impact Muthoot's volumes. So on the back of this clarification that came in, the stocks did recover from the lowest point of the day, but despite that, the stocks are under pressure today.
Absolutely, yes. We are seeing a bit of a pressure, but like Ashesha was mentioning, we did speak to the management of Muthoot Finance. Let's go cross and listen in.
RBI, Reserve Bank, wants to instructing that it is clarifying that more than 20,000 you should not pay in cash. That's a simple part of it, and I don't think there is any impact on that, because we are even otherwise. Most of the customers have bank accounts, and we have been doing real-time transfers a long time. So it is just a question of time for we have to just tell our customers that instead of cash, if you were to take it through bank, it's not an issue at all. And we don't see any big challenge there.
SBI.
Okay, let's move on to the next stock that's in focus, and we'll talk about India Shelters. Ansh, what's the reason behind the stock? Is it earnings?
Yes, that's right. The reason the stock is up is because of earnings. The stock was actually up by around 8% in the morning, but due to market pressure, it has come down, still sustaining in that 3.5 to 4%. The company has reported net interest income of 131 crore, which is up by around almost 58% from 83 crore, whereas PPOP is also up by 44% from 73 crore to 105 crore. If you talk about a profit, even that has jumped by almost 47% from 53 crore to 78 crore. So almost all the numbers look very attractive. Also, if we see on chart, the stock seems to have given a breakout from reverse head and shoulder chart pattern, which adds to the optimism in the stock. In addition to that, the stock has also surpassed about 20 and 50 DMA levels. So for those reasons, the stock is in focus.
Okay, surely keeping an eye out on that, Shrishti. But Asian Paints, that's what we were talking about before, the numbers that came out, and I can see them flashing on our screens right now. So yes, Shrishti, do you want to take the numbers right now?
Well, yes, we don't have all the numbers right now, but it's just the profit figure that is flashing on the screen. That profit is being reported at 1,257 crores versus the estimate of 1,310 crores, and that's definitely a marginal miss that is coming in on Asian Paints numbers. And we are also seeing that the stock is down about 1.5% as of now, but it's also a 28.15 rupees per share dividend that the company has paid in terms of the interim dividend. So those are the earnings coming in from Asian Paints. Apart from that, if we talk about the margin performance, then indeed the Q4 margin has come in at 19.4%, and that's a decline on a YOY basis from 21.2%. In terms of the revenue as well, there is been 1% of decline on the revenue front, as well as EBITDA is down about almost 9%. And that's a weak set of numbers actually coming in from Asian Paints. A 2% decline on an intraday chart, we'll see. Then we can see the fall for Asian Paints. Apart from that, the domestic volume growth has been of 10%. For the decorative business in Q4 FY24 also saw some price cut across the product categories, suppressing the revenue growth, because we are clearly aware of the competition, Winnie, that we are seeing in the paint industry, and hence maybe one of the factors that Asian Paints must have gone ahead and done some of the price cuts. But the domestic volume growth has been at 10%. That's the commentary coming in from Asian Paints.
And Shrishti, let's not forget that, because we're seeing a clear miss on the revenue front also, the EBITDA front also, from what the street was expecting, from what ET Now poll is also, which you can see flashing on your screens. We're seeing a miss coming in, the recovery in that rural, that's also a key that plays out for them. That doesn't seem to be something that is panning out right now. And EBITDA margins, when I'm looking at it, seems at quite a low level right now. 19% is what the EBITDA margin is around at, 19.4, which is one of the lowest levels that we've seen since almost, I believe, Q4 FY23. So that's what Asian Paints is looking like. Okay, that's Asian Paints. We'll talk more about it later, but let's just slip into a very short break. As of now, the stock has seen a fall, a slight bit of a fall, sharper fall after its numbers. We'll be back after the short break. Welcome back. You're watching Market Fatafat on ET Now. Let's carry forward the discussion about Asian Paints in terms of the numbers. And we do have Priyam Tolia, Senior Research Analyst at Axis Securities, joining in with us. Priyam, very good afternoon. And Asian Paints, first look at it. What are you making of the numbers? Seems like a bit of a miss, at least on the revenue and margin front is what we're seeing.
Yes, the numbers are pretty lower than our estimates, at least in terms of the margin front. While on the revenue front, it is marginally low. But if you see from the volume growth perspective, it is ahead of from our estimates, because the company has taken the price cuts, which has led to the increased volume growth for the company. So for this results, what we believe is that the numbers are weak on the margins front. So there are 2-3 reasons for that. If the consumer demand continues to remain weak, also the Q3 was pretty much better in terms of the festive season, but this Q4 was tepid in terms of the demand front.
Yes, Priyam, hi, good afternoon. This is Shrishti also joining in. Yes, even the management is also acknowledging the fact that the price cut have actually impacted the numbers. But looking ahead, they remain confident about the pickup in the demand conditions with a favorable monsoon forecast. So what is your outlook on this one? Do you believe that this could give some momentum or some confidence to the investors, as well as in the investors' con call as well? What will be the key factors that you will be watching out for?
Definitely, so if you see from the commentaries from most of the consumer companies, so they are pretty much positive in terms of the rural recovery, right? So the normal monsoon and the government spending will likely to increase the rural demand going ahead, though they are seeing a sequential recovery. So the key outlook for what monitorable would be from a company perspective would be the demand environment, especially in the rural and the smaller towns. Correct. And also, if you see the raw material prices volatility, will be watch out for going ahead. And of course, the competitive intensity after the entry of the grassing will be the key monitorable.
Okay, Priyam, thank you so much for joining in with us today and giving us an understanding in terms of Asian Paints. That was one of the nifty companies that reported their numbers. A bit of a miss that's on revenue and margin front, but Priyam also said that, let's not forget volumes are better than what the street was expecting, so keeping an eye out on that. But what's flashing at the bottom of your screens, you can see SBI, they have reported their numbers. When you're looking at it in terms of SBI's numbers, the net interest income is coming in at around 41,655 crores versus last year 40,392 crores. Our expectation for the NII was at 40,794. That was the ET Now poll, 40,794. So seems like slight bit better in terms of that we're watching out for in terms of the NII of the company. The NNPAs, that has seen an improvement, 0.57% versus 0.64% in terms of the net non-performing assets. So an improvement in terms of the asset quality at least is what we are watching out for. In terms of profits also, let's keep an eye out on that. What we were expecting was around 13,379. I believe the profit number looks slightly better than, much better than what we were expecting. So yes, keeping an eye out on the profit number, because it seems like the profit number is somewhere around 20,600 crores. So much better than what we were expecting. But there was a one-off that was also there. So that is what the management had already highlighted, that one-off would come in terms of the profits of the company. And maybe that's why, we are seeing that bit of a improvement there is what we could say in terms of the profitability. But we do have Mahantesh joining in with us right now to talk about SBI's number. Mahantesh, first look at the numbers. Seems like at least the asset quality has seen a bit of an improvement. How are the numbers looking like to you?
The number are looking great. The net profit number at over 20,000 crore is a good number. Asset quality, like you mentioned, has sequentially fallen down. And the company is looking for good growth ahead, looking at the overall advance growth number that they have posted.
Right. So, what about, we are obviously this right now when you're looking at it also, there was that one-off which was there of 5,400 crores. So, is it just optically that it's higher, or maybe, the overall you see that number, even without that is something that is a very big positive that you're seeing?
So, without that number also, if you compare it with the overall, a pre-exceptional profit number, then from a sequential basis, it's a growth of about 8,000 odd crores extra, which is quite good considering that that would amount to almost 30% sequential growth. Even on a year-on-year number, the profit beat before exceptional item is good. When we have such a good profit beat, generally it means that the capitalization for the bank is now stronger, and therefore the growth possibilities ahead in terms of furthering their advanced growth remains more sanguine.
All right. Hi, Mahantesh. This is Shrishti also joining in. What exactly in the commentary that you will be watching out for is the first question. And secondly, just yesterday when we had the Canara Bank numbers, then there was a cut in the deposit growth guidance. So specifically for SBI, any expectations on that front or any key things to watch out for in the commentary?
The key thing that needs to be watched out is that what is the bank looking at in terms of the provisioning covers ahead. We found that some of the private banks were going in for conservative provisioning norms and making provisions much ahead of any bad events that come in. So provisioning policy ahead would help us understand how the bank will start growing in the future. So provisioning is the great number that one would look at. This 5,000 crore is that estimated pension liability that they had because of the wage revisions that the bank had recognized. But apart from those provisions, I'm looking at what is the business-led, lending-led provisions that they would make.
Sure. Mahantesh, we know we do have the slippages number that's just come in also what we're looking at. 3,867 crores slippages this time versus last quarter was around 4,960 crores, down 22% sequentially when you look at it. What's your understanding on this as well, and what should we make of it?
So the slippage is a big improvement. 3,800 crore number, or for that matter, even a 4,000 crore number that existed in the prior period is not a great disability for a bank of the SBI size. They are pretty large. Any slippages which is below 5,000 can be considered as normal operations as far as the bank is concerned, and therefore the slippage improvement itself points to better growth ahead.
Yes, points to a better growth ahead, and we're seeing the stock also seeing a sharp uptick after the numbers were reported. But Mahantesh, thank you so much for joining in with us to talk to us about SBI's numbers in Q4. Surely seeing an improvement there. Advanced growth also seems like an improvement, and slippages indicating an improvement there. So yes, that's all about SBI. We saw a sharp jump up in the stock, as of now also holding on to gains of almost 1.8%. But let's keep it going with the other stocks that have been buzzing in trade. A lot of numbers that are already reported that are supposed to come from the Nifty 50. But Foram M.Chheda Industries, what's that looking like? Should we expect a good up move in the stock going forward?
Stock is bullish. Now, once we talk about a bit of a past performance in the month of March to April, in 1 month, the stock price has moved from around 290 to around 480 levels. That's closer to nearly 65%. That's a decent gain. After that, we've seen the stock consolidating since last month. Now, this consolidation has also led the price to retrace closer to around 23.6% as per the Fibonacci retracements. And it's just quietly consolidating. If you look into it, it's not, it's kind of just down by around 2% today, but very well holding into that range of around between 438 to closer to around 460. So overall, the stock continues to consolidate, but the trend is bullish, thus one can continue to hold on to it. But a very strict stop loss should be maintained below the levels of 433. And initially, the upside is capped to closer to 480 levels, that's its previous high. But once those levels are taken off, one can expect some further upside momentum. So from a holding period of around 3 to 4 months, the stock does look good bullish.
Alright, that's about Exide Industries. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back in order to highlight more of the buzzing counters.
If you like this video, then like, share and subscribe to ET Now.